Hey, everybody. Good morning. Good morning. I hope everybody's staying above the news cycle, the doom, the gloom. Keep your head up. Keep working. It's going to be all right. I want to look at some numbers for Bitcoin and for the money supply, just to show you guys how stuff actually grows, and we can compare it to Bitcoin. So I have a window open here. It's the monetary base. You guys know this is my flagship sort of exhibit. A lot of numbers go into this. Many, many, many central banks around the world, getting close to 100 currencies now. And as I've divided this up basically between free world and autocracies, though I know that there's some NATO countries in question here, even the United States is in question. We'll see what happens during the elections, how free and fair they are. But good morning, Oscar. Good to hear from you. Hope you're doing well. If you smooth out all this stuff, and I know it looks obviously crazy from the global financial crisis, big increases, cooled it off for a few years, repo spike, and then pandemic. Now it's been cooling off. But let's just sort of smooth it out and look at the numbers, okay? So without doing regressions, but just straight up point to point, basically. So I take the first value. All right, I'm starting here at the end of 1979. First value for the United States was $131 billion in monetary base. Last value, 5.5 trillion. That's an 8.5% CAGR. Very smooth number. Of course, it'd be like much higher during these years, much lower during these years. That's what it is. Japan, 9.4%. All of non US NATO, 7.5%. Switzerland, 8.1%. Australia, 7.6%. South Korea, 8.8%. Taiwan, 9.1%. Ukraine started here. Oops, sorry, do I have the right row? Ukraine. Notice, by the way, there's different start dates, okay? A lot of them go to 1979. Ukraine, I only have data from 2002. So there's 7.1% CAGR from there. China, Hong Kong, 12, or I should say 10, 12% respectively. No, apologies. 12, 10% respectively. Russia, 6.4%, although this is measured in dollars, mind. Or did I mess that up again? No, sorry. Too many numbers, guys. 13%, 13.4% for China, 11.9% for Hong Kong. That looks more like it. 10% for Russia, starting from 94 in dollar terms. Iran, 6.4%. That's just it is not their black market rate. If I had their black market rate, it would be higher. And then rest of the world, 9.2%. Right, these are just broad numbers, and they're in dollar terms. So it's not even, it's just not native terms. So in their native currencies, it can be often much, much higher. But it's just a little bit of a guide. Now, if I go to say, let's pick very aggressive window here, just before the global financial crisis to the end of all the silly season of the pandemic, you get the United States at 16%, 13%, NATO countries 16%, Japan 24% for Switzerland. They devalued their currency quite a bit, but they still rose in dollar terms. All right. 17% Australia. Which one is negative? Ukraine actually lost value. China 8%, Hong Kong 15%. If you go from, say, 2000, dot-com boom, all the way till today, we get back to these sort of more normalized annualized CAGRs, 9, 8%, 10%. China, low double digits. Russia as well. So this is kind of an interesting way to look at it. One, because it does reflect money printing, but it is not always, in fact, it's only in the case of the United States, in the actual lens of the native currency. So when you're looking at the native US dollar, it's exactly the growth rate, but it's actually not necessarily all bad if your currency is growing here in dollar terms. But you can still generally see the trend, all right? 8, 9, 10% per year. And if we go back to the traditional idea of inflation, increase in the money supply. If you are outstripping the money supply versus, say, GDP, traditional nominal GDP targeting, the delta there will be the true inflation rate. That is price inflation. But I think as just a safe guide, it's, if you talk about, again, you could pick the really crazy years, you could pick years where it's backed off, but if you go out 10, 15, 20 years, by and large, you better be getting, if these are what the central banks get on return on their money, thinking of the Cantillon effect, this is what you should try to get on your money as well. When I was in school, which is way back here, we'd be talking about stock market returns, getting to 10% would be pretty crazy. No more. I'd say 10% is a minimum. I'll put this in percentage again just to show, again, from another perspective. How one could look at the relative wealth of a nation. Right? Makes most sense here when we have most of the data. All right, so even when the monetary base globally was under 10 trillion back here on the eve of the global financial crisis, it was actually the best time for China. And especially when, let's say, Chinese bonds were quite out of favor during the pandemic, this was the worst time for them, relatively speaking. But they're growing again. 20% now of the wealth. And if you add their client states, it's much more. I will say still, I'm still working through this. Iran, with my other exhibits, I do have black market rates. I don't have them here. This is actually official rates, so it overstates the dollar value. It's another thing to keep in consideration. That mostly, as far as this chart goes, would affect Iran because they are a way discounted currency as far as black market versus official. So this percentage would be quite a bit smaller for Iran. And obviously that's a topical point in the news right now. And again, I really do wonder how the old American's gonna, if it's gonna be cool to be democratic, or if they're just gonna throw the baby out with the bathwater in November. The Congressional Budget Office, I believe, put out a report that said the United States debt in 10 years could get to 50 trillion. Right? You can think of these percentages as basically what the central bank of each country owns of their own debt, but also United States debt, most importantly, because the dollar is the reserve currency. And that's where I do think it's interesting that Europe is kind of holding its own here. It's kind of large, right? Looked from a military lens, non-United States NATO is larger. It's larger population-wise, actually, by a much larger magnitude, but so is China. So also the sort of dreamers, the hyper Bitcoiners, say that we're going to hyper Bitcoinization any minute. Any minute. Obviously, there's a military component here. There's a fiat monopoly component here. There's a reality component here. Every nation or group of nations in this chart is not going to give up power willingly. And I would say they wouldn't even necessarily cooperate with one another willingly. See Russia defending Iran, or Russia defending Venezuela, or Russia defending Syria. Or United States defending Europe. So some interesting figures, I think. And when you think about the growth rates, it all plays together. So let's go back to the old main board, Bitcoin price. I had a lot of questions on YouTube in particular to try to shed some light on, well, sorry, let's go back out. If you just look at this and you can see where the green line is of price, right? It's at historical lows relative to the power trend. It does not mean this is the exact bottom. No one knows that, but statistically, it's quite low. So people were smartly asking me, what could that mean for a percentage gain of Bitcoin? And as I don't have that completely ready, a sort of a back of the envelope calculation could be to look at these CAGRs, again, compound annual growth rate, but let's look at them from historical lows to highs. All right. So let's say, and they're going to get worse, right? Be prepared for worse and worse numbers because it's a power curve and time goes on. But anyway, say you bought at 200 euros back here. Ukraine's full revolution for dignity was in full effect, and Yanukovych already fled to Russia. Let's say you time it perfectly, bottom to top. All right, so somewhere around 200 bucks, and then you get to 14,000 euros in 2017. Number to look here is actual CAGR, actual. All right, so you're not looking at on a trend, but you're looking at the actual green line to green line. All right, that's pretty good CAGR. 500% CAGR. That means if you roll it all up and sort of get it to one digestible figure, you're doubling every few weeks, actually. Even though you weren't in reality, that's what you do with a 500% CAGR. it's pretty impressive. Even if you catch trend growth here, all right, trend growth, your CAGR is 113%. And if you catch, say, evolving trend, which is even worse, by the way, so you get a little bit higher up here, which again, you're way overpaying for Bitcoin, but it's a trend line, so you'd be 75%. All right, so if we had to take a true range, anywhere from 75% CAGR, that's not gross, that's CAGR, that means year on year on year, which is enormous. All right, remember stock market, well, I just showed you the money supply. It grows at least 10%, okay? Stretched out over a long time. But 75% to 535%, okay? So that would be cycle one, or like the true first. I know that this is technically cycle one, but the numbers are silly good if you're buying Bitcoin at sub-euro prices. All right, let's look at the next one. Took a year to discount itself back to all-time lows relative to the trend at the time. And then we actually have a lot of choppiness, but you make our way to $60,000 or 50,000 euro Bitcoin in 2021. Okay. So 3 lines again we can look at. And I'll just take this off because it'll be even easier. Although I don't think, yeah, they don't come off of my table, so maybe it doesn't matter, but I'll take them off. Let's look at these 3 lines, okay? The black line, the green line, and the gray line. The point is just to get a relative number, okay? So the green line is going to be most extreme because we bought down here, sold up here, theoretically just for fun. 238% CAGR. 70% on the OLS, and then the evolving, which is most conservative, 60%. So again, per year, enormous figures. Enormous. This doesn't mean you got that in the course of a year. It means you had to wait 2 years. Right? You pick it at the bottom and you wait 2 years, 2.5 years. But when all is said and done, right, if you play these statistical trends, these statistical bands the right way, these are your returns. Okay, so notice the first time we were at up to 500%. Now it's only 238%, so it gets lower because it's a power curve. All right, and then maybe 60% on the conservative side. All right, now let's go here. Let's say we wait till Sam Bankman-Fried goes bankrupt, and we go all the way, even though it wasn't like, you know, this was totally different cycle, as we see, but still, let's just say we go till the end of it, because you still want to wait. Maybe we didn't know this was the top. We thought it was going higher. I certainly did. Let's take it to here, which is, let me find the end price. A little bit more. Somewhere here. Let's go here. All right. It's not perfect, but whatever. Nothing in life is. So 3 trends across 2 points. Okay, so we wait till SBF completely pukes the market, as well as Celsius and Terra. Peter Zeihan said Bitcoin is $16,000 overvalued. $17,000 when it was $16,000, something like that on Joe Rogan. That was the time to buy. This was the time to sell. All right, very fun exercise. CAGR, notice, actual 90% lower than the prior cycles. But that's still an enormous CAGR. It's enormous. 90% is 10 times better than the stock market, that most people are getting in the stock market. Or if you wanted to just play this favorably, or say, not favorably, but more fairly, say just for whatever reason, you sold some early, then you bought some, then you sold and bought, but all in all, you stick on the trend. 47%, 37. Oh, what happened there? Sorry. Too many bugs and clicky buttons, roughly. You can see the difference there. 70%, 47%, 38%. All depends. It's because I picked a little bit. There we go. Should get back to, yeah, 90%. 90% CAGR on these two trends, something like 40 to 50%. All right, so notice we were at 500, 200, 90 on the actual. So what could this mean for this level that we're at right now? Let's do one more. Let's look at here to here. Okay, just going from bottom back to trend. 182%. Notice it's even more because it was faster. Also interesting. Okay, if you waited, this is interesting. It shows you the time value of money, right? You waited another year, your CAGR is down 90%. But because of this sort of, we had the ETF boom, and just getting from that low back to trend took a year and a few months, and that's 180% CAGR. So again, if you want to ask me if this time is different, or Bitcoin's, destined for lower highs, all the while sort of disavowing us of the power trend levels, I would say 99% certain we go back to something that looks like the trends that I just showed you. Absolutely. And it's funny, if you wait only until getting back to trend, you don't even have to wait that long, right? Your thumbnail is perfect, Oscar, for that. Yeah. Good point. That's why I love charts like this. We can go back in the past and see what the reality was, right? I remember a lot of boredom here. 2015, 2016, people thinking, Bitcoin's not going to happen. You had the blockchain revolution. You have the Corda R3 federated blockchain, just like the intranet. And to really understand the intranet, you had to be working in a corporate office in the 90s or the 2000s. My first internship was a boring corporate office in 2002 summer. We had an intranet. It's all gone now. So if you look at this chart and you tell me, okay, in 5 years, Bitcoin's going to be like down here, back at $100, or up here, right around $500,000. I mean, you guys know where I'm putting my money. And Bitcoin's cool because we don't have to rely on like hype or sort of weird narratives. We can just follow the trend as it's incredibly hard money. Let's go back and look. Not here, but let's go here to here. Yeah, I'm gonna have to take log off. Let's go here to here again. So we only have to wait to getting back to the trend. Forget the blow off, right? So about at $200, you get back roughly to the trend. 230, 240% CAGR. Let's do it here. Blow off, getting back to the trends really quick. Here. 400% CAGR. We can even say you bought the fear in 2020. $334% CAGR. And Peter Zeihan's Infinite Knowledge, 167% CAGR. In all of these cases, it was a year and a half. This one was a little bit longer. This one, depending on where you started it, it's, you know, closer to 2 years, still not 2 full years. But here and here, from the bottom back to the trend, year and a half, and a pretty large CAGR representation of that profitability. Good morning, MP. Good to see you. Been a while. Can't sleep? I understand. So anyway, I don't know if that directly answered the YouTube comment that I got, but the idea was basically, you know, what could this represent in terms of return? And I think if you just look very, very basic, right? You're getting around 100% per year, CAGR, and it takes a year or a year and a half, maybe 2 at the max to get from the low, right, represented by this Q10 percentile, back to the trend, right? Low to the trend, very fast actually here. Took less than a year, half a year, even though this went back down. Same. Year and a half. So that's how I would look at it. I wouldn't try to time the market or, you know, think that we can play this any better than Wall Street, other than use the wonderful guidelines that come from these bands. Right? Like even by 2030, even if we stay at the lowest quantile and Bitcoin is on some much slower power curve, which I don't see, it's $250,000 Bitcoin by 2030. More likely 450,000 euro, not dollars, the euro chart here. All right, back to this one. Bitcoin Lab. I need to put them in the source here. It's a great tool. You can download the stuff yourself from the website Bitcoin Lab. So short-term versus long-term hodlers, in profit, in loss. Dark green, light green is in profit. Dark red, light red, in loss. Short-term versus long-term. Long-term is dark. I expect this to go on for a little bit. Right, this sort of bouncing around based on the price, and then you can see we're actually slightly getting more in profit here day by day, but this is far from bottom calling. Probably need to see something like this or like this. I would agree that it could be quicker this time, but again, like Oscar said, this is the time to meditate and imagine how it's going to be feeling after you put some of these sats to use 2 years from now. If you need cash 2 years from now, or if you just want to hold for the long term. But the red relative to the green is increasing, and it needs to increase more. It's just clear. Here it is in percentile, or not percentile, but in percent. Still buggy. I need to get my percentages correct there, but this is the sum of each group in percent. They're going to total 100. All right, so here, I guess I should just group these differently. I should group it in who's in loss and who's in profit, but in any event, you can see it's, you get to 60%, sorry, 70% in loss here. So 7 and 10 in loss, made a bottom. Even 8 and 10. Yeah. 85%. See that? 55 plus 29. 85%. 85% in loss here. Close to 50. It's going to be... I feel like these numbers changed from when I was talking yesterday, but maybe not. I'm just doing them in my head. 55. 55% here. No, can I read? No, this is 45. I was correct yesterday. 45. Sorry. 85, 45. And then here, the biggest amounts of red, maybe here. 58. Yeah, I need to regroup these. It's too annoying. I don't think this one went over 50% in the red. This one did. I think. Closer to 50 for both of them. So if you think about that as a benchmark, do we get to 50? Maybe not. Maybe it's only 40, but we're only at 28% in the red. You know, we have to think how Wall Street might affect this, yada, yada, yada. I understand UTXO game is switched, but still, you know, some consolidated since the halving of last year, but generally more UTXOs than, 5-10 years ago. Good morning. Hail 8953. It's a good point. What town is that behind you? Can I ask what city? Bottom line, this could get up to 50% red before we turn around. 40% possible. We're currently at 28. And as the comment here says, we're going to chop for a while. Again, for those just joining, the key is getting back to this curve is our goal and what to think about. And it can happen sooner than you think. By the way, let's do another one. I was making some pretty aggressive picks, right, from the bottom, catching the bottom price to the trend. Let's say you even bought on the trend. And let's just wait for the cycle. Like, not the cycle, but whenever it went down and then came back. God, this is so annoying. These crosshairs aren't big enough. All right, so here to here. Only the trend I want to look at. Forget about everything else. It's going to be close, but not only, actual and trend should be pretty close. So about 115, 120%. Took you 2.5 years here. Okay. Here. This was a quick one. Ignore that price. It's more this because the way I caught it, but I can do it more accurately if you want. Let's do it exactly. Okay. Still wrong. This is trend to trend point. 80% took you a year and a half. But of course it went down again and whatever. Here, trend point to trend point, roughly 50-60%. Took you 2 years. So, the good news is we've already gone way down. We're going on 4 or 5 months. So based on these patterns, I would say a year to get back to the trend line. You know, if it's quicker, you might have something like that. But there it is, guys. No sweat, right? No sweat. Oh, excellent. What a town. Really enjoy that city. Here's one I don't think I've shown yet. Again, this is Bitcoin Lab. This is not a hodl chart exactly. It's just address cohorts basically. But I thought it would be interesting to go together. Like, let's look at variance of if you're under or over 10. Okay, so basically addresses that have between 0 and 10 are in the red. And when you get purple up to the blue, you're above 10 BTC in the address. It's just not UTXOs, but it's Bitcoin in the address. You can see the total curve. Exchanges play a big part here. It's a little bit worse than UTXOs, right? Because UTXOs are kind of, I think they are the better way to look at this, but still, right? Because getting Bitcoin in to addresses up to 10 was easier here at these prices. Harder here. But let's just look at a few different ones. So here's just 0.1 to 1. Interestingly, they topped out here, sort of have been flatlining. Oh, this is a better view, I guess. So as the price goes down, hodlers start throwing these into hardware wallets. You know, is that going to show here? Probably to as extreme a degree. I don't know. Let's look at this. This is just 0.01 Bitcoin to 0.1 Bitcoin. Same deal. As price rises, or sorry, as price falls, didn't rise that much here actually. More Bitcoin here as price was rising. A lot more here as the price was falling. Just trying to show patterns of where the accrual goes. Interestingly, I noticed a lot were coming in here. Or was it here? Maybe it was here. Here. So likely BlackRock, ETFs, El Salvador. I noticed there were some consolidations there, but these are consolidations of UTXOs by exchanges and large players rising as well. Between 100 and 1,000 Bitcoin per address. Sorry. Over 1,000, that's consolidating down. Over 10,000, lucky you if you're in this cohort and not a miner or an exchange holding. This one's a bit choppy. over 100,000 Bitcoin, you can count the amount of addresses, basically. One or two addresses. We don't know exactly the number, but it's 4 or 5 addresses maybe. Fun. So I'm not sure this one's as good of a predictor for. It just bug out on me. Hold on. I think it did. Let's go back. Yeah, it did, interestingly. Bugs in the software. I'll load it up again. Anyway, short term should grow. These, not short term, but smaller denomination addresses should grow as we go into this loss phase. Right here. I'll pull it up again just to summarize. So as the dollar value, right, obviously increases, it's really harder to call anything from this chart in my opinion, but it is. If you go up to 1 Bitcoin, generally you have a lot of growth as the price is falling. We'll see what happens here. What it really says for short-term action, I'm not sure. That's my answer. I think it's more just interesting to look at. And this one in particular is, as I said, no, sorry, this one is interesting in that it probably really shows institutional consolidation. But as far as like kind of decisions or seeing things about, when to buy or not, I'm not exactly sure. Just interesting to see. This is better. And yeah, I would look for this to go back to, there's price now on log on right, black, if you can see that black line. All right, so as we bottom, get deep, deep red. %85. Close to 50. Close to 50. Right, 45 to 50% before you start going up again, and you mark the bottom. So to me, this is 4-year cycle intact. I know people think the 4-year cycle's too dumb or too simple, but halvings move in 4-year spurts. I think I said it on the program before. I made a pretty good, some pretty good levered buys at this point, but I'm not an institutional investor or anything, and my interest was really expensive. Even though I did pretty well, like overall, even got out, sort of got in and out at different levels, but started like here. But I think just buying at these levels straight up spot is, it's hard to go wrong there when you don't carry interest. So I would say no reason to rush. Right, this dark red is going to spread out, and we just have to see when it starts to narrow again. And then you can see it, obviously the short-term effect, it narrows quicker. I need to get the I need to group these correctly. Not short-term and long-term, not short-term and long-term, but in profit, in loss. That's better. And then we can see. I think I could even just change it now. You guys will be excited again to know that you're going to have some access to these in the next month or two. Okay. Yeah, I thought that would be worse to group it that way, but I guess it's better. One second. I did not, but it's a nice way to look at it. And even the simple ratio of those is probably something to that as well, right? If you think about the top before 20K, it was, let's just even say 1,000, right? Or say 1,300, right? So it's, it's like 15x, 3x, 2x. It's going to be some multiple, maybe below 2 for the next top. From 126 is what I'm saying. But yeah, it's a good point. Anyway, we can look at this one now. This is better. All right, a little bit different. The group, way my software is doing it. So let's look at the most extreme. 80, 85. Here's also 85. 85. This is what you get doing math in your head. I thought I saw 1/50. Did I not? Close, but not over 50 here. Before short-term profits start to rise, there you see the light green. Very close to 50. And here, also very close to 50, but not 50. So your guess is as good as mine, but don't fight the trend here. This is where we're going. I mean, we're just going to stick here for a little bit. You know, what does it mean that the first two were 85 or 80 as the worst? The next two were 50. Could this time only be 40? I have no idea. I have no idea. But this is a good metric. So again, the theme of today, which I wanted to try to explain at least, is 1 to 2 years is all it takes to get back, say, from where we relatively are right now to the trend. I fully expect that. I would say it could be even within a year if you look at this bottom, although this gave us another bottom, which, who knows, right? But if it's one of these gradual bottoms, if anything, it's sooner than a year. Wall Street's locked and loaded. This is, right, like, this is what is more likely, in my opinion, because we never had a extreme overshoot of the trends. We were just right on trend for 2 years. So that's what I would say. Within a year, and even, again, catching that bottom to top, roughly, look at this CAGR, it can be huge. Just getting, not even bottom to top, bottom back to trend, right? So if you bought at the end of 2018, 3,000 euro Bitcoin, be 6 months, you'd have a, relatively speaking, 462% CAGR. But if you smooth it out a little bit, 100%. Hello, Michael. Yeah, I mean, you can find every single interview I did on pods, and myself, I was saying it. I very explicitly said in the fall, let's not call the 4-year cycle done yet. Like, when it comes to January, February, and we're, at $130,000 Bitcoin, then I'll call the 4-year cycle dead. And lo and behold, I see a 4-year cycle completely intact. And think about all the other people in the fall. Doesn't matter. I'm not calling anyone in specific, but I'm just saying a lot of people said it was over. 4-year cycle's done, permanently new plateau of Bitcoin. And a lot of people that didn't even know about the power curve, but saying that we're at some new level of highs. There we go. I'm definitely a don't fix what is broken type of person. Bitcoin is great for that. Rick Rule, very good commodities investor. He said that with commodities, it's very predictable, cyclical markets. And I think Bitcoin is even better. and it's shorter. You don't have to wait like 10 years or 15 years to get out of the bear. Of course, it's caution right now, right? I mean, I'm not saying bet the farm on Bitcoin. Never financial advice. You guys know my caveats, but I mean, look at the levels. This is what this analysis is for. As less than a year and a half. 183% CAGR. Point to point, green line to green line. And if you discount it or you buy at a wrong price or whatever, you only give yourself coming in at $34,000 Bitcoin, double the actual price, you would have still made 50% CAGR. So it's almost mind-bogglingly simple to me. And then for the people that say we're going to 30,000 or whatever, okay, I can't predict that for sure that's not going to happen, but I can show you this chart. And, you know, it seems very unlikely. Like 99% unlikely. 99% likely not to happen. The people that say it's going to 30,000 are probably the same people that said we were at like a permanently high plateau back in October. Probably because they're looking at it on an exponential curve and not on a power curve. Running. One other thing I wanted to say today is, you know, we don't need to root for money printing. It's actually not the chart I wanted to show. I think it's this one. But if you think about it, and the more and more I look at this, again, this is an index that I've created, but Bitcoin's just not correlated yet. And we actually don't even need to root for money printing. So again, here's the same chart. Yes, it can go up during money printing. Well, let's just go log right to show you everything. It can go up during money printing for sure. It can go down during stagnation of money printing, can go up again, but it can also go up again while no money printing. So this is the real buck the trend. And probably they're going to start money printing this year, and we're going to stay low for a little bit. It's not correlated. This is where it's at. What else, my friends? For my European friends, I'm looking very hard at this one. It's Hungary's GDP per capita. This is, again, why didn't the year show up? Fixing my bugs on the fly here with you guys, but this is 2024. Hungary is even lower per capita relative to everybody else. GDP and oh, sorry, I'm pulling up too many different charts at the same time. Let's look at this again. I do really hope that Hungary can find a voice for freedom here. So again, this is 2020. I got the date now. This is 2023. This is what people usually call the sort of the wealth side of GDP. It's how much money is being spent on consumption by households in a country per capita. Hungary is now last here. They're below Bulgaria. Bulgaria just joined the euro this year. So as of 2025, which I don't have, they're the lowest. Autocracy does not pay. To my American friends, autocracy does not pay. But it's going to be very interesting election in April. Hello, Alexander. Kirichenko, is that right? Kirichenko? Ukrainian? No? Bull trap? No. I mean, I'm not saying we're going up tomorrow for sure. 100% no. Long time. I mean, wait a year. Not a bull trap. Good. My Cyrillic is not perfect, but far from perfect. Not good. Let's give it a year. Enjoy these prices. That's all I can tell you. You know, could they pull this bar lower? Right? Yes. Like if we go sideways for 6 more months, even to here, all that it means is like we could be here, right? Let's just say we're at this level, which is like, I don't know. Let's just say we're at the same price, 50, 60,000 here, even 6 months from now. It just means, first of all, it's not crazy, right? It's not crazy to think it could be. Sorry, let's go to June. Okay, so we go to June, half a year. Let's say we're here, which don't look at the tooltip, but look at I'm sort of lining up to the current price. What the hell is the current price? 57,000 euros. So 57,000 euros here is right where my cursor is. The 0th percentile, the cheapest, would be 62. I think very easily we could be at 62 by June, but let's say we didn't. Let's say we treaded sideways. It just means we pull this line down. But the line still shoots up in that nice direction that goes up $100 a day or 100 euros a day. So I'm just saying, don't panic. Don't expect much right now, especially while this widens. And I think this is going to widen. Wait, this is the wrong one. This one's better. This has got to widen to at least 40% red. Flush out the weak hands. 28% right now. In stocks, I'm not sure I'm happy with this format, but again, let's take this off. Here's the actual, what you call the yield curve, right? Or 10-year minus 3 months. So normal market is up here, recession risk, or even perhaps recession predictors down here, and then here we went super low. As long-term rates were being cut faster than short-term rates. Let's put the 10-year back. But yeah, hard market to, at least from the yield curve, to understand. Does seem like it could roll. This was a weird one. So I remember this when this yield curve was becoming inverted again. All right, so here's 0. And it did it not go inverted? Maybe it didn't. Right here. It did here. But obviously we were completely inverted here as Powell was cutting interest rates. Sorry, holding interest rates, raising interest rates, cutting the money supply, cutting the money supply. And it's just such a odd thing during the old Biden years. You had the Ukraine war, like full scale started. And we just went through 2 years of negative yield curve. And then we had the tariff tantrum. But if you look at the long picture, just of this from the 70s, this was the first time that the yield curve went negative, and like the markets didn't even crash really at all. What it really means for the future, I'm not sure, but weirder and weirder markets. No, that's why I prefer, I mean, no problem. That's why I prefer the Bitcoin standard deviations from a trend compared to like a stock. So I can show you, like, let's look at NVIDIA. I just saw they had record levels of revenue. So let's go. Let's go first with Apple. I have this going back 20 years. Here's Apple. I'm gonna pull up NVIDIA. Sorry for the dead time. I'll change the starting date. All right. So again, stocks, if you really want to buy and hold good ones. Apple gives you great CAGRs, really no matter where you are. Although we are theoretically at the lower end. But and then for an absolutely insane chart, let's look at NVIDIA from 2022, which is really when our AI bubble started. I'm doing an evolving exponential. So you get the wavy lines in the past. %57 CAGR, it's better than Bitcoin. On the OLS, which is this line, right? Which is, if you bought, say, here, maybe you would get closer to this OLS return, but just during this window from year end 2021, actual CAGR 57%. I plan on giving these charts or providing these charts in the new interface that I plan to release. So don't worry, but you can look at this 6 ways to Sunday, but this is the AI boom. I guess I should start it even more really year end 2022 to fully pick it up. There's a lot of different ways to look at this. Now, 2022, I'll do a quantile, not evolving. You can see the difference. Okay, so quantile always does these straight lines on exponential, but it picks up this one. And then it scares it based on the last trend. And like, whoop, maybe we could go out here a little bit lower. Regardless, still crazy prices compared to now. These are per year CAGRs. Picked up NVIDIA at $15 year end 2022. There you go. Any more questions, guys? Don't panic. It's the theme of today. It's probably going to get messier for Bitcoin. You know, we're in the process of unfortunately expanding that red. And the widest the red was at the end of the last cycle was here, close to 50%. Am I saying it's going to 50% now? No, I have no idea, but everything seems intact to give us more losses for hodlers. At the end of the day, this is the guide. Don't panic. All right, that's it for me today, guys. Thank you. Let me know if you have any other questions, comments, concerns. You want to see some other type of chart. And like I said, I'm going to get this engine released publicly with some limitations, but publicly within the next couple months. Thanks, everybody.